of individuals coming in and wanting to own the physical commodity as well as the equities, then yes, I would concur. You could see certainly movements up as we've seen in historical times when metals have hit their high point, just from the fact of that supply-demand aspect, and you're getting much more movement into the space. And we saw a bit of that, when silver moved up to $21 earlier, and of course we've seen a bit of it over the last short while with silver touching back up to 15. But I think when people finally look and say, maybe it's a year or two from now, but look and realize that the value in the currencies, whether it's in the dollar or others, isn't there as it has been before, and they decide as part of a strategy to move into precious metals, then you're quite true. We could see, substantial price movements because of that larger demand than we're currently seeing right now.
Is that what you believe will happen?
I believe so. I've positioned myself that way. It's been the first time in a while that I've actually gone out and I own physical gold. I certainly own lots of physical silver, as well as the equities. And I think from the fact that with the amount of new money that's being printed by governments on a global basis, that ultimately I think precious metals will benefit from some of that activity.
We've talked about the fact that silver could really take off here and could get manic if you have things line up a certain way, which I think, you and I probably both suspect they will. But let's move it to physical silver, and then we'll go back to your company in just a minute. Can we have dislocations this time, Bob, in the sense that those stockpiles don't exist? And so if you have aggressive investment come into silver, where is the silver going to come from?
Well, that's the point. I mean, from identifiable stockpiles, we can see them from, what's on COMOX or TOCOM or London. We know where the ETF stands, and that's about it. There aren't other large identifiable stockpiles. I suspect there are many private stockpiles now held by, individual investors. I know many of our shareholders, as well as owning the equity, would also own coinage. Myself, I own physical bars, but the issue is, when does that come back in the marketplace? People often talk about the fact that back in 1980-81, when silver price went up substantially, there was a lot of scrap that came back in the market. Well, there was scrap, but it may have been only 50% more than the year before, and so your scrap may have gone from 120 million ounces up to 180 million ounces. Right now, that would represent, about 20% of current demand for silver on an annual basis. So it's not that large a number, and there isn't the infrastructure. Nowadays, if you wanted to sell some scrap silverware you may have, where do you go actually to do that? And then you have to look at the refining costs and everything coming down for it. So when you get around to the actual physical large stockpiles are out there, people talk about the fact that there are many areas of it, but they're often held emotionally. It could be your family heirloom silver. You think of some of the churches around the world have, great amounts of silver, but that's unlikely to make its way back into the marketplace. And so I think the amount of physical silver out there that can meet the demand is certainly limited, and it's widely distributed amongst those of us who believe in silver, and so that is a constriction that could certainly have an impact on price going forward.
And you make a good point also, Bob, that when you look at the fact that the last bull market cycle consumed a lot of the scrap where people were willing to dishoard it, I'm not sure how much would be available today because, as you said, it's in pretty strong hands, and I agree with you. Let's move on to your company now. One of the primary reasons for anyone to invest in Silver Standard is management. And, Bob, you've run this company so lean in terms of expenses, and I noticed earlier this classic Bob, right? You terminated mailing annual reports because that could save $150,000 a year, which I thought was terrific. I think more companies should do that. Do you feel, because that's fine and that's great that you did that to save money, but let's talk about where the real costs come in, which is on the production side or ramping up the productions. Do you feel confident that the team you have in place today will be able to make sure these costs are contained on these very large expenses, with relation to bringing the company to production?
Yes, I do. George Paspalas is our Senior Vice President of Operations, was an Executive Vice President, worked at Placer Dome for many years in a wide variety of roles, at a mine manager role as well as a regional supervisory role. And so he has hand-on experience, and George actually, spends the time down at site. He's actually heading down there again later today. And so we've got a hands-on management team who want to get down on the ground and see where costs are and what we can do to make sure we manage those. And then, as you point out, we at Silver Standard have always been very shareholder-centric, from the fact that we've raised money from shareholders and realize it's their money. It's not the company money, but it's the shareholders' money, and it's up to us and our fiduciary responsibility to make sure that we spend it as best we can and get the kind of return from that for shareholders as best we can. And so I look at the figures fairly closely and ask questions and determine, it's an education for me because I haven't been as much as hands-on at mining. I have worked at mines in an earlier part of my career. But, a team, we go through and determine to make sure that our shareholders are getting the best value, that what we can do in cost cutting to be the most efficient is the way that we operate here. And like you say, we can do smaller things here at head office, such as with annual reports. It's important for us to communicate with our shareholders, but through the Internet now, we're able to do that more efficiently and effectively. And we just want to make sure that that attitude goes throughout the company in all of our projects.
Let's talk about the Pirquitas project you're bringing to production. You mentioned it earlier. You've encountered some delays. That's normal in my mind anyway, but you still expect 3 million ounces of silver in 2009 and 10 million in 2010. And Bob, I also, before we go there, I think people sometimes forget, if you've got a mine with a certain extended mine life, like you're talking about here with Pirquitas, which I think is nearly 15 years, and Peter Barnes mentioned this last week from Silver Wheaton, but people sometimes lose sight of the fact that, yeah, there can be a delay, but really in the end, what difference does it make when you get it kicked out and you get it produced? That's the main thing, because there's a long shelf life there for this project. So what about bringing this thing to production? Are you pretty comfortable now that you're going to be able to kick out 3 million ounces this year?
Yes, we are. We've looked at it since we've had the slower ramp up, and I think you make a valid point, as Peter would have, that, when you're looking at a long-term life mine where you're investing all the capital now that's going to last that length of time, you don't want to be pushing, any pieces of the equipment beyond their capacity to try and achieve something. You just have to look and say the delays are normal. The weather affected some and perhaps made them a little bit longer than we would have liked. But because we are here for 14 to 15 years, then we want to make sure that the equipment is not compromised in any way. And the other benefit of that is, depending upon your metal cycle, frequently often metal cycles run in 7 or 8 years. Silver, of course, as we know, seems to have its own cycle. But, in conventional operations, you often will find many mines will run for 7, 8, or 9 year mine life. The thought of having a longer mine life, and why we like the Pirquitas project, is the fact that something like it can run through one and maybe into 2 cycles. And in the second cycle is often where you can make very good money for your shareholders, because during the first cycle you get it up and running, you get it paid off, and then as you get into the second cycle, of course, everything's paid off and you're just generating cash for your shareholders, which you can then apply in your other operations. So, we built this new. There's very little used equipment in it, and we've designed it to last a while. And it's been a few months since I've been down, but I've been very impressed with the team that we've had on site, our Argentine partners, as well as some of the expats who have been involved in getting the project up and running where we are now, working and producing concentrate from the silver circuit.
Let me ask you about Pirquitas, because I don't know if you guys have put anything out officially. I don't think so, but without holding in anything, just back of the napkin, because I know you guys have done this at corporate, assuming a stagnant silver price. We don't have it really go anywhere, but it just stays stagnant where it is. What about some cash flow projections from Pirquitas? Just not holding yet anything, not an official company release, but what could happen there?
Well, where we're getting ramped up right now, I think where we're really going to be able to assess its good potential going forward will be in the fourth quarter, when we would expect to get cash flow positive, and that's the disclosure which we've talked about in our conference calls, and the one we just had last week. I mean, the reason for putting a project in Pirquitas into production, of course, is to make money, and the nice benefit of it is the fact that not only we're producing silver, but we're also producing tin. And we could be producing upwards of many millions of pounds a tin a year when we're up at full production. And, of course, that tin goes a long way in offsetting your costs, so that can really minimize the amount of cost that you would have on the silver. So it's a question that hopefully we can come back and I can give you a little more firmer numbers on, again, after we get through our next quarter and see how the operation is going, be able to speak to it. But I think with the tin credit coming in and the kind of silver prices that you're seeing currently, then going forward, we would expect Pirquitas to be a positive foundation for the company.
What about the San Luis project, where a feasibility study is expected to be completed in the third quarter of 2009, and where you have increased your stake to 70%? How promising does that project look at this point, Bob?
The San Luis joint venture, which we have with Esperanza Silver, we currently have a 55 interest, and you're right, by completing a feasibility study, we can increase our interest to 70%, and then by putting in production, we can increase our interest up to 80%. It's a small project located in Peru, but very high grade. We've got measured and indicated resources there where our silver grades are between 500 and 700 grams of silver. So those of your listeners, you're looking at material 15 to 20 ounces of silver, and 20 to 30 grams of gold, which is between 2/3 and an ounce of gold. And so when you look at current metal prices, a ton of rock there is quite valuable. And we still think there's